we are now in week 6 of our course topic. For this evening, we will discuss about the organization and functions of the BIR and also the jurisdiction, power, and functions of the Commissioner of Internal Revenue. So we'll also discuss the case sizes and problem exercises. For the learning outcomes, at the end of this module, you should be able to know about the rule-making authority of the Secretary of Finance, determine the jurisdiction, power, and functions of the Commissioner of Internal Revenue, or CIR. First topic is organization and functions of the BIR. It includes the rule-making authority of the Secretary of Finance. So under Section 244 of the NIRC, or National Internal Revenue Code, so upon the recommendation of the CIR, so it's the Secretary of Finance who shall promulgate all needful rules and regulations for the effective enforcement of the provisions of the NIRC. The rules and regulations, the ones who promulgate it is the Secretary of Finance, but upon recommendation of the Commissioner of Internal Revenue. So these are called revenue regulations. So these are formal interpretations of tax code provisions, and there is permanence and stability in tax laws since these are promulgated by the Secretary of Finance, and it can only be revoked, modified, amended if in order for it to be revoked, modified, or amended, there must be another regulation, revenue regulation, for its revocation, modifications, and amendment. However, under the Tariff and Customs Code, or TCC, it's the Commissioner of Customs who promulgates the rules and regulations, although it's still under the Department of Finance. Some of the specific provisions to be contained in rules and regulations. First, so these are found under Section 245 of the NIRC. So you have your time and manner of canvass by the revenue regional director, and the manner of how these records and lists of canvas are made and to be kept. It also requires the forms and how they are labeled, the condition and manner of the label, brand, or mark of the goods intended for export, conditions to be observed by the revenue officers, the condition under which these goods are intended for storage, the conditions under denatured alcohol may be removed and dealt in, the manner in which revenue shall be collected and paid, the conditions to be observed by the revenue officers, manner of tax returns, information reports which shall be prepared and reported, and tax collected and paid, and the manner in which internal revenue taxes shall be paid. So basically, everything that every regulations that being implemented by the NIRC, by the CIR or the BIR. So you can find that under Section 245. So those are the provisions which are contained in your revenue regulations. That's why if you will notice, when you buy imported goods or imported items, especially for liquors or cigarettes, for your excise payment of excise tax, it is paid if you see the seal on top of the cap or on top of the cap of the bottle of the alcohol, etc. So all of these are part of the revenue regulations imposed or implemented by the BIR. For the BIR, rules and regulations to be valid, so it must be consistent and in harmony with law. It must be reasonable, useful, necessary, and more importantly, it must be published in the official gazette or a newspaper of general circulation. So this one is very important because before the revenue regulation can be implemented, it must be published. The rule on publication is must be complied with since, as we have discussed before, um, the tax laws are part of our civil laws. Next is the jurisdiction, power, and functions of the Commissioner of Internal Revenue. So you have here the different powers of the powers and duties of the BIR in the through the Commissioner. So first is to interpret tax laws. So that's under Section 4, Title 1, Section 4 of the NIRC. The Commissioner has the power to interpret tax laws and decide tax cases. So the power to interpret tax laws is under the exclusive and original jurisdiction of the Commissioner, which is subject by the review of the Secretary of Finance. While the power to decide tax cases, so includes these include disputed assessments, refunds of internal revenue taxes, fees and other charges, penalties imposed in relation to and other matters arising under this code or other laws shall be vested in the Commissioner subject to the exclusive appellate jurisdiction of the Court of Tax Appeals. Take note, it's exclusively within the jurisdiction of the Court of Tax Appeal for appealed tax cases decided by the Commissioner. So this interpretation of tax laws issued by the Commissioner, these are also called administrative issuances or BIR rulings. These are the less general interpretations of the tax laws at the administrative level, so being issued from time to time by the CIR to clarify certain provisions of tax laws, and they are merely advisory and not binding, except to the addressee, and may be reversed by the BIR anytime. So that's the difference between revenue regulations and administrative issuances. Okay? So just take note of the distinction. So the rulings may be considered as a ruling of first impression or rulings with established precedents. So rulings of first impression, so these are rulings, opinions, interpretations of the CIR being issued from time to time to clarify certain provisions of uh, tax laws and without established precedents and which are issued in response to a specific request for ruling filed by a taxpayer with the BIR. So since it's first impression, the taxpayer who inquired or who requested for the interpretation, these are considered rulings of first impression. While rulings with established precedents, so they are mere reiterations of previous rulings, opinions, and interpretations of the CIR as delegated to duly authorized internal revenue officers. Next is Section 5. It's the power of the Commissioner to obtain information and to summon, examine, and take testimony of persons. As we all know, it's the duty of the Commissioner or the BIR to ascertain the correctness of a tax return or to make a return if it has not been made, or to determine the liability of a taxpayer for any revenue tax, internal revenue tax, and of course its subsequent collection. So to be able to prepare these returns or to determine the amount of tax due by the taxpayer, so all of this can be yeah, section Section 5. So these are the powers of the commissioner to obtain information, summon, examine, and take testimony of persons. So these five are the ways that the commissioner may do to be able to determine the amount of tax due or tax liability of the taxpayer in case he failed to file, or in case uh, there is some discrepancy in the amount of tax he filed, or in the amount of return, in the amount of tax he filed in his return. So based on the best evidence rule. Okay. So to examine any book, paper, record, or other data, so to obtain on a regular basis, so from any person, office, officer, other than the person subject to audit or investigation, to issue summons and to take testimony of these people where they can obtain the information, and to cause revenue officers employees to make a canvas from time to time. So usually the revenue regional director will issue a letter of authority for them to conduct examination and investigation of certain taxpayers. So the general rule is for the commissioner not to see or examine bank accounts. However, under section 6F, paragraph F, which we will discuss in a bit, there are certain exceptions wherein the commissioner may look into the bank accounts or examine the bank accounts of a taxpayer. So under train law, there is an additional requirement wherein the BIR is required to submit a tax incentive report to the CDA and the Department of Finance. Okay, so the tax incentive reports by the Cooperatives Development Authority is required to submit it to the BIR and to the Department of Finance. So this include information on income tax, VAT, and other tax incentive. Section 6. So these are the powers of the Commissioner to make assessments and prescribe additional requirements for tax administration and um, enforcement. So for the first is examination of returns. So these are your tax returns and determination of the amount of tax due. So under the train law, the commissioner and his duly authorized representative shall have the authority without requiring any prior authorization from any government agency or instrumentality to examine the returns and to assess the correct amount of tax of any taxpayer. So that is another amendment in the under train law. So if there is failure to submit returns, statements, and reports or other documents, so the BIR can obtain or can assess the proper tax of the taxpayers based on the best evidence obtainable. So in case a person fails to file the required tax return or other documents as prescribed by law, or he willfully or otherwise files a false or fraudulent return, so it's the duty of the commissioner to amend or to make a new return based from best evidence obtainable of the amount of the assessment of the amount of proper tax to be paid by the taxpayer. So aside from this, the CIR is also authorized to um, have inventory taking of goods. And based from the inventory taking, again, they can assess the amount
of tax that must be the tax due from the taxpayer, which is deemed prima facie correct. So failure to when a person or a taxpayer fails to issue receipts and invoices, and the returns again does not correctly reflect the declarations made in that return, again, based the commissioner may also um, prescribe the minimum amount of gross receipt sales and tax base uh, um, in comparison with similar businesses to determine again the amount of tax due from the taxpayer, and this is again shall be prima facie correct. So for purposes of determining the internal revenue tax liabilities of said taxpayer. Another is the authority to terminate tax period. So there are three instances wherein the commissioner can declare the period of a taxpayer to be terminated at any time. So this is first when a taxpayer is retiring from business, if the taxpayer is intending to leave the Philippines, or to remove his property, or to hide or conceal his property. Or number three is performing any act tending to obstruct the proceedings for the collection of the tax for the past or current quarter. So here, the commissioner will declare the tax period to be terminated and demand for payment of tax for such period, and it shall also be subject to penalties according to law.
F. So authority of the commissioner to inquire into bank deposit accounts. Here, oh wait, may iba dapat.
E is gone, but under paragraph E, the commissioner can also prescribe the value of real properties.
So this is another amendment of the train law wherein the law requires a mandatory consultation from both public and private appraisers, and with prior notice to affected parties of the fair market in determining the fair market value of real properties. And then there will be an automatic adjustment of the zonal valuation of these real properties once every 3 years, and these zonal valuations must be published or posted before there can be adjustment.
So under our law, the basis for computing internal revenue tax on real property is either the fair market value as determined by the commissioner, or the zonal value, or the fair market value as determined by the provincial or city assessors, whichever is higher. So kaya you will learn later on in filing in paying taxes based on real property. So whichever is highest. So from the conveyance document, or the assessed value, or the fair market value. Assessor's determination of fair market value, or the zonal value as determined by the commissioner. So F, this is very important. So again, as a general rule, the commissioner cannot inquire into the bank deposit accounts of taxpayers except for three instances. So first, when for a decedent to determine his gross estate, so the bank account of the decedent to determine his gross estate. Second, if any taxpayer has filed an application for compromise of his tax liability by reason of financial incapacity to pay his tax liability. So if the taxpayer wants to um, apply for compromise because of financial incapacity, then the BIR can inquire into his bank account. And lastly, a specific taxpayer subject of a request for the supply of tax information from a foreign tax authority pursuant to an international convention or agreement. So these are the three instances wherein the BIR can inquire into the bank accounts of a taxpayer.
Ito pala yung E. G, authority to accredit and register tax agents. H, authority of the commissioner to prescribe additional procedural or documentary requirements. For when we speak of assessment, so that is the written notice to a taxpayer to the effect that the amount stated therein is due as a tax and containing a demand for the payment thereof. So, meaning the BIRs determined or examined that the return you have filed, or if you have not filed any return, so they will determine the amount of tax based from their assessment, which is due, and then demand for its payment. When we speak of jeopardy assessment, so this is a delinquency tax assessment made without the benefit of a complete or partial audit or investigation by an authorized revenue officer. And it is made when it finds itself without enough time to conduct an appropriate or thorough examination in view of an impending expiration of the prescriptive period for assessment. Okay? It is issued only to comply with the period of issuing a valid assessment. So, if the BIR is already leading to the period of the prescriptive period for assessment, and they need to prepare an assessment based on a partial audit or investigation, that's considered a jeopardy assessment. So here, all presumptions are in favor of the correctness or of tax assessment, and there must be a grant of authority before any revenue officer can conduct an examination or issue an assessment, which is the letter of authority. So before they can conduct an assessment, there must be a letter of authority issued by the Revenue Regional Director or RRD. Letter H, that is authority of the commissioner to prescribe additional procedural or documentary requirements. So, assessment is required in case of deficiency taxes or failure to file a return or filing a false return. And also when the tax period is terminated. And they may prescribe additional procedural or documentary requirements in filing tax returns. Right? When we speak of authority to cancel assessment, so here assessment is canceled when the as previously assessed deficiency tax is reduced as a result of the reinvestigation or reconsideration requested by the taxpayer. And you have your termination letter. So that is when where the deficiency tax is paid after investigation and there is no discrepancy, or when the deficiency assessment is paid after the issuance of the pre-assessment notice, and where the deficiency assessment is paid within 30 days from issuance of the final letter of demand. So before we proceed, let me show you first um, the process of assessment. Okay. So first, the BIR will issue the letter of authority for the examination of the records of the taxpayer, and then they can already conduct the examination under Section 5 of their powers of the CIR, and that BIR will then issue a pre-assessment notice or known as PAN. But however, not all the time pre-assessment notice is required. So there are exceptions wherein pre-assessment notice is no longer required as provided in section 228 paragraph A to E. So that should be E. Then within 15 days from receipt of the pre-assessment notice, so you are given 15 days to file a reply. So after filing a reply or for non-filing a reply, so within 15 days from receipt of the pre-assessment notice, the BIR will then issue a formal assessment notice or formal letter of demand. So this is always required, okay, so for them to um, demand the tax due from the taxpayer. So upon receipt, within 30 days from receipt of the formal assessment notice, the taxpayer may file a protest. So usually this is motion or petition for reconsideration or reinvestigation or motion or petition for recomputation. So the difference between these two, so for reconsideration or reinvestigation, the taxpayer must also submit within 60 days from filing of the protest relevant supporting documents to his motion for reconsideration or reinvestigation. And this will um, stop the running of the prescriptive period of assessment. For motion or petition for recomputation, so you do not need to submit relevant supporting documents because it's merely for recomputation and it will not stop the running of the prescriptive period of assessment. Okay. So, after filing this protest and together with the supporting documents, the CIR may deny or does not act on the protest. So if the CIR denies the protest, so the taxpayer may, within 30 days from the receipt of the denial, file an appeal to the Court of Tax Appeal. But for inaction on the part of the CIR, so after the lapse of the 180 days period of inaction, then within 30 days from such lapse of 180 days period, the taxpayer can file an appeal to the Court of Tax Appeal. So this is important. If you fail to file the protest or if you fail to file the period within which to file an appeal to the Court of Tax Appeal, um, the final assessment notice will already be due, final and executory and demandable. And you no longer have any remedy on if you fail to do this process. So this is jurisdictional. So failure to comply with the period, so the Court of Tax Appeal will not acquire jurisdiction over said appeal. Okay. Then, if the CTA denies the appeal, so the taxpayer may file for a motion for reconsideration or new trial with the CTA division. Again, if it's denied, they may file a petition for review with the CTA and bank. Again, if it's denied, so they can file the petition for review on certiorari under Rule 45 with the Supreme Court. So that's the procedure on the tax assessment. So you will learn more about this when you go to tax remedies in taxation 2. Okay, so just to give you an overview of that so that you understand these powers of the commissioner on making assessment. Okay, so in this case, if the deficiency assessment is paid after issuance of the PAN or pre-assessment notice but before issuance of the final assessment notice, so pwede na mag-file ng termination letter. Or it is paid within 30 days from issuance of the final assessment notice or letter of demand. May termination letter na kasi yun yung period to file the protest. So kung binayaran mo, ibig sabihin hindi ka nag-protest, so mata-terminate na yung assessment. Okay. Section 6. Another is the authority of the commissioner to prescribe additional procedural documentary requirements. So, the BIR may also suspend or temporarily close a business if they fail to issue receipts or invoices by a VAT registered taxpayer or failure to file a VAT return or understatement of taxable sale by 30% or more of the correct amount or the failure to register of the taxpayer. So all of these are grounds for
closure of business, suspension or closure of business. Another authority of the power of the commissioner is to delegate. Okay, so as a rule, the commissioner may delegate powers vested in him with rank equivalent to division chief or higher, of course, subject to limitations and restrictions. So the commissioner cannot delegate the following. So the power to recommend promulgation of rules and regulations to the Secretary of Finance, the power to issue rulings of first impression and to reverse such ruling, the power to compromise or abate, except if the deficiency tax is 500,000 or less, and if it involves minor criminal violations, then it can be delegated to the regional evaluation board, and also the power to assign or reassign internal revenue officers. So these are the powers of the commissioner which cannot be delegated. Section 8, so yeah, Section 8, Section 9, 10, 11, 12, 13, 14. So these are just reading matters. So just read them. Just take note under Section 10, it's the Revenue Regional Director who has the power to issue letter of authority for examination of taxpayers. Okay, so from the Revenue District Officer. So Section 15, so another important provision for the revenue officers to make arrests and seizures. Okay. The previous issuance of warrant of arrest or seizure by court is not required. So for violations of um, penal law or regulation administered by the BIR within the plain view doctrine of the internal revenue officers or employees. So if the taxpayer is violating penal laws or regulations which are under the power of the BIR, and it's in plain view, it's in plain view, so they can arrest the taxpayer without issuance of the warrant of arrest. However, revenue agents have no authority to search without a warrant, so any business establishment for supposedly fraudulent records. Okay, so if they um, think that the business is having fraudulent business or records, then they must undergo the process as provided by law, okay, as to the assessment. But they are empowered to, in the course of their investigation, um, to seize these records. So if they discover that in the course of investigation, but not just supposed fraudulent records, right? So they must have the letter of authority to examine the records, and if they found out that there is fraud, then they can seize the records. Again, section 16, 17, 18, 19, 20. So just read them. So section 21, so these are the sources of internal revenue. So these are national internal revenue taxes as found in the National Internal Revenue Code. So you have your income tax, estate and donors tax, value added tax, which is also considered a percentage tax, other percentage taxes like um, maraming percentage, I cannot recall now, but maraming percentage taxes. Excise taxes like liquor and wines and gas, documentary stamp taxes, and such other taxes imposed and collected by the BIR. So these are national internal revenue taxes. And the provisions under the NIRC governs these taxes. So kaya important that you know this kasi yung remedies and provisions for these kinds of taxes you can find under the NIRC and the amended laws. Yung other sources of revenue ng state is your custom duties, but these are governed by the Tariff and Customs Code. Okay. There are also certain incentives granted to government and private entities which are already withdrawn except for the following. So, under this following, covered pa rin sila ng incentives, tax incentives issued by the government. So, those covered by the non-impairment clause of the Constitution, um, enjoyed by enterprises registered with the Board of BOI, Export Processing Zone Authority, Philippine Veterans Investment Developments, Corporation, Industrial Authority, Copper Mining Industry, and those other exemptions conferred by Tariff and Customs Code, NIRC, and the Local Government Code, and lastly approved by the President upon recommendation of the Fiscal Incentives Board. So last topic is non-retroactivity of rulings, which I've mentioned already last time in our last lecture. So as a general rule, um, rulings are prospective in nature and they cannot be given retroactive effect if it will be prejudicial to the taxpayer, except on the following. Under the following instances, there can be retroactive effect of the ruling. So first, if the taxpayer deliberately misstates or omits material facts from his returns or any document required of him by the BIR. Second, where the facts subsequently gathered by the BIR are materially different from the facts on which the ruling is based. And third, where the taxpayer acted in bad faith. So I'll just share with you the case digests and the answers to problem exercises to your Blackboard Learn because it's in my PC. I cannot share it here. If you have any questions, just send me a message. Okay. So in summary, the Secretary of Finance, so upon recommendation of the CIR, is authorized to promulgate all the rules and regulations for the effective enforcement of the NIRC. So for it to be valid, the BIR rules and regulations are to be consistent, in harmony with the law, reasonable, useful, necessary, and it must be published in the official gazette or in a newspaper of general circulation. So as a rule, the BIR rulings are not retroactive, subject to certain exceptions. So the powers and duties of the BIR: first, assessment and collection, enforcement of forfeitures, penalties, and fines, execution of judgments, give effect and administer the supervisory and police powers conferred to it by the NIRC and other laws, then recommend to the Secretary of Finance the rules and regulations for the effective enforcement of the provision of the NIRC. So the powers of the CIR, so take note of this mnemonics, is quite a lot, but the most important thing there is yung in relation to assessments, obtaining information, summon and examine and testimony of persons in determining assessments of tax amount tax due, termination of the tax period, interpretation of the NIRC or other tax laws, to make assessment, to inquire into bank deposits under certain instances, prescribe real property values. So those are some of the more important powers of the CIR that you need to be aware of. So that is the end of our lecture for today, for tonight. I apologize with the technical problem.
It's okay po.
Okay. So you have any questions, concern?
Yan, ma'am.
None po.
Next
None
week,
po.
in our schedule, supposed to be your midterms, but since your midterms is on October 24, we'll still discuss the next topic about the general principles on income tax. And this will still be part of your midterms. So next week we'll still meet for the next lecture, and then after that may 1 week tayong break for you to prepare for your midterms. So I will not give you any lectures a week before the midterms. And then the following week, yun yung midterms week. So kaya hanggang next week lang tayo which will also be included in your midterms. Okay? So that's it.
Noted po.
Thank you po, attorney.
Bye.
Thank
you po.
Thank
Thank you very much po, attorney. Happy birthday, Nico.
Happy birthday, Nico.
Happy
Thank you.
Happy birthday to you.
Shot.